And let's bring in Michelle Schneider now, Chief Strategist at MarketGauge. Michelle, good to have you on. Let's talk U.S. markets, of course, rebounding overnight with tech continuing to rally. What is fueling this rotation back into tech?
Well, I'd say a couple of things. Number one is obviously China cutting rates, I think, was helpful in that it was just another indication as we're looking around the map globally, even though Europe stayed the course with Canada lowering rates, that the U.S. here might be getting ready to do so. And I think that was a positive. Obviously, the earnings in terms of the expectations for tech is extremely high. And really, at this point, there is no reason to get negative in tech unless, of course, we wind up with major trade restrictions or some other geopolitical flare-up happens. And so the dip was happily bought and probably long awaited for something like that to happen.
Right. At the same time, small caps, Russell 2000, for example, that went up 1.7%. Small caps, they're holding up. So it suggests that investors are not exactly moving their money from small caps to tech, but they are also keeping it in small caps. So is this welcome news for those who are concerned that the market was lacking in breadth?
Well, the interesting move in small caps comes on a couple of things. Number one is we know that the ratio between the growth stocks and the small cap stocks got to historical levels. And generally, whenever that happens, it's really a matter of what's going to be the headline to bring that ratio in. And so money was already piling in. And there's also some fundamental reasons, besides the fact that the ratio got stretched. And that is, there's a lot of talk by both political candidates, by the way, even before Harris stepped in with Biden, about reshoring and bringing business back into this country. And by nature, those small caps are very highly represented by companies that produce and manufacture in this country. And it goes back to what we said earlier, which is the optimism that we all seem to agree that the rates have peaked and they're not going to go any higher. So the question is, at what point does the Fed ease up? And that would also be very good for the small caps. So while it's good for tech, that was so underrepresented. You get people like Druckenmiller, who took off a lot of their growth stocks with huge profits and put a lot of that money into the IWM, in particular, the small cap ETF.
Right, and I'd like to know what this all means ahead, especially with renewed momentum for the Democrats. Following Biden's exit and Kamala looking like she will be the Democratic nominee. What it spells for markets ahead. I mean, there were concerns of volatility until it becomes more clear if Kamala could pull ahead of Trump or if Trump prevails.
Well, I would imagine, Liz, that we'll see a level of volatility. But I think today was kind of an interesting day because there really wasn't very much volatility. In fact, volatility dropped by 10%. And yet now it's out of the bag, if you will, that it's going to be Kamala and against Trump. And so it's really going to be a matter now, I think, not so much. As we get closer, even the polls, I think people will look at it with some kind of skepticism because we know that polls are very subjective. I think at this point, it's really going to be a matter of what is the common ground between the two candidates. And those will be the areas that might do well. Like I said, reshoring and manufacturing is definitely an area that they both agree on. It's just a matter of where they want to put money. Infrastructure, something they both agree on. So that would be another place to be looking in the next few weeks. And interestingly enough, when we talk about alt energy versus oil and gas, we had Trump first come out and say that he really wanted to get rid of all the sanctions on EVs, but he's also being highly supported by Musk. And so he's kind of flipped on that. So I guess the real message is try not to worry so much about the political stance and look at the merits of the market itself. And earnings will be big because it'll be the projections for the next quarter after this one. Obviously, the interest rate policy will be big. And hopefully the geopolitical situation around the world, which has been a bit of a tinderbox here and there, stays relatively calm.
Right, and before we go, I just need to get a quick comment on you on then what happens with the Trump trade, even though we know we try not to get caught in caught up in what happens on the political front.
Well, the Trump trade, I mean, so you're really talking about putting money more into the things that he is saying that he will do, like drill, baby, drill was one of the things he mentioned at his speech last week. So, I think that Trump as a candidate will probably want to stay with very headline-oriented news and then shift policy accordingly to maintain being popular, number one. And number two is, even though he's, talking very much about the economy and lowering taxes and again, bringing jobs home and being sort of anti-globalist and putting more strong tariffs on China, by the way, both of those parties agreeing, it's really going to be also what happens with inflation, because we still have a huge debt crisis in this country. So that's why I say the talking points, not as important. What happens, can we actually reduce the debt? Can we lower taxes and raise wages without spiking inflation? And those are the kinds of things that we'll be watching for.
All right, Michelle, appreciate your time. Michelle Schneider, the Chief Strategist at MarketGauge.